Hello and welcome. You're tuned into CNBC TV18 Prime. Let's get cracking on a brand new edition of the Big C from the CNBC TV18 Prime Ionic Wealth Studio. I'm Manisha Gupta, back with your daily dose of commodities, crypto and currencies. Before we head to our guests for the day, let's take a look at the global equity markets. And the stocks on Wall Street ended the session mixed as investors look ahead to the Federal Reserve's policy decision in the next week. The Dow shed 30 points, while the S&P 500 and the Nasdaq extended the winning streak to 3 days. Shifting focus also now from the US to the Asian markets, where you are looking at a mixed trading. The cues that we are getting in from the Wall Street have been quite mixed as well. Back home on the Dalal Street, then, it has been green after Reserve Bank of India cut the repo rate by 25 basis points to almost 5.25% in a widely expected move. And on the commodity front, then, the prices of the Brent crude have edged up as Ukrainian strikes on the Russian oil infrastructure stall peace negotiations. The traders also continue to watch for a possible U.S. move on Venezuela after President Donald Trump called and signaled, rather, imminent action against the oil giant. Joining us on the show now is Soni Kumari. She's commodity strategist at ANZ. Soni, hi, thank you so much for joining in. And so much is happening even before the year is coming to an end in the international markets, with the kind of concerns that we especially seem to be looking at in sense of crude prices, whether it has been about Venezuela or Ukraine attacks on Russian oil facilities. And then the fact that we also have seen Saudi Arabia cut oil prices for Asian consumers to the lowest in many years there. Conflicting fundamentals, would you say?
Yeah, thank you for having me, Manisha, on this show. Yes, there are a lot happening in the commodity market, especially in oil. I think despite, there is a larger consensus in the market that market is in surplus, oil prices are holding in the range of 60, 63. And we see that, because of, recent geopolitical developments. I think market is still pricing some geopolitical premium, whether it's related to Russia or toughening sanction on Russia, or in Venezuela. Both are saying that these developments will be positive for the oil market, and despite the market being in surplus. Going forward, I think what would be the important for the oil market will be the peace deal between Ukraine and Russia. While it's looking a bit uncertain at the moment, in case of in case the peace deal is reached, and we see that some of the sanctions on Russia are lifted, I think market is going to react negatively. There could be a knee-jerk reaction in the market, and prices can fall below 60. And if opposite is going to happen, we are seeing the tough sanctions on Russia continues to remain in place, and on the other hand, when we are seeing supply risk coming from Venezuela as well. So those all things could see nearly 1.5 million barrel of oil flows at risk, and in that case, we can expect oil prices, holding the ground near 65 and even moving towards 70. So yeah, there are a lot many things which we need to get the clarity on, and that's what oil market will be looking for in the coming weeks.
Soni, let's talk about the outperformance really that we have seen for silver in this year, with an expectation that we could be looking at 60 before this year ends. And then there is this big upside that the banks seem to be putting out on in terms of silver. I've seen and I've read reports suggesting that we could be looking at levels like 65 and 70 and $100 an ounce perhaps in the next 2 to 3 years as well. Where does ANZ stand when it comes to silver forecasting?
Well, the kind of price rally we saw recently in silver, we also did not expect that, but the reasons are quite visible. I think we are seeing a kind of supply squeeze in the market right now, and it started, from the London market, where we saw inventories drawing in early part of the year, and right now, in the last few months, we saw inventories, building up at LBMA, but the strong inflows in ETF, it's reducing the free floating inventories at LBMA, and that's why investors and market is bet bullish about silver. And this tightness is not only limited to London market; it's now spreading to other trading hubs as well. So recently we saw inventories falling in China, China exchange, and that has shifted the future markets in China into backwardation. So the tightness, I think that's the key driver for silver, and this is caused by the looming import tariff risk by the U.S. and this is keeping the market severely dislocated, I would say, and this until we get clarity on U.S. import tariff, I think this dislocation is not going to normalize. And in case of if we see tariffs are imposed on silver, then there could be further inflows in the market, and rest of the market inventories will be drawn down further. So that could be a bullish risk for silver, where prices can go anywhere. What as you are mentioning, 65 and 70. But what we are looking at is like we have not revised our silver price target yet, but like for next year, the existing forecast is around 61.
All right. How are you also looking, Soni, that and the gold prices? Because 60% of gains onto this one as well, and we've done 43 plus kind of levels, 4,300 plus kind of levels here. What is the risk-reward ratio when you look at 2026? Because all bad news perhaps is factored in, all good news has been factored in as well. What is that you will watch for next year, and what is your price targets now for gold?
Yeah, right, Manisha. So the delta, the change which we had seen this year, I think that was quite a strong. We are not going to say something similar. And in 2026, I think there will be much more clarity around import tariff and lesser price we'll get from the US. So next year, I think we are still holding positive view on gold, but the kind of price rally will not be repeated. We are expecting, because in the first half of next year, we are still expecting that gold prices will move higher towards 4,600, 4,800 levels, because fundamentals are still supportive, though we saw a kind of price pull back after prices hit a record high of 4,400 levels. But this price correction is looking quite healthy. I think prices are still consolidating in a very comfortable zone of 4,200 level, and since the price outlook is still supportive, investor will try to build fresh positions in the market. And if you look at the recent speculative positions, they have been cleaned. So it seems like the recent price consolidation is preparing for the ground for another price rally moving into next year.
All right. And then Soni, it is said that the copper is the new gold. I mean, the kind of run-up that we've seen in copper as well, all-time highs on LME and US and Indian markets as well. We've done quite a bit, 35% up in this year. How is next year looking to you? I mean, are you still looking at 15, 20% of gains continuing on this?
Well, copper has performed like more than what we expected, and there are reasons for it. I think on the demand side, I would say the Dr. Copper is somewhat deviating from indicating the right pulse for the economy. We are seeing some cracks in the economic data coming out of China, and in the US also, things are not looking that great on the demand side. I'm not talking about the structural demand, which we are we are likely to have from EVs and data centers and other technology sectors. But the economic data which we are seeing, it's not suggesting very very strong demand numbers for copper in the short term. But what has impacted copper this year is the severe supply disruption, and these disruptions are not limited to impacting supply growth this year. It's also spilling over to 2026. So fundamentally, I think copper is still looking strong. Market is in deficit, this will keep the downside limited in case if we get any profit booking. Apart from that, I'll just mention that the other unique development which we saw this year is the import tariffs on copper, which is still it's still looking very uncertain. I think there'll be clarity on copper import tariff by somewhere by second quarter of next year, and till then, I think the copper can continue to flow in the US, and that will keep the market bit dislocated in the coming quarters, and that's going to support copper prices. But at this price level, I think the volatility is going to be quite high. So we are still cautiously optimistic about copper at this price level.
All right. So downside is limited and the upside is something that the Soni says we'll have to watch out for. But buy calls clearly continuing in case of gold and silver, and crude prices could decline below $60 is the in-house view from ANZ. Soni, as always, thank you so much for joining in and explaining on what the commodities can do with so much clarity. And with that, we'll slip into a short break. On the other side, we will be joined by Avinash Gupta, who is the Vice Chairman at GJC, and we'll delve deeper slightly more when it comes to silver physical demand, especially from the Indian markets. Welcome back. You're with us on the Big C on CNBC TV18 Prime. Joining us now is Avinash Gupta. He is the Vice Chairman at GJC. Mr. Gupta, hi, thank you so much for joining. In your sense, first of all, on the silver prices, because there seem to be so many reports and varied numbers, but most people tend to believe that it is on the higher side and newer highs is what we will see in silver from here.
Manisha ji, good afternoon. Silver is in a very strong consolidation phase, and I feel the kind of usage of industry is there in silver. I don't see the prices of silver are going to come down from this level much. There will be a volatility which will be there for in the metal, as the nature of the metal is there. So roughly around 5 to 7% volatility on the downside will be there. But from here, I look the silver price to be roughly around $65 by the end of this year. This is my expectation, and I'll be more than happy if I go wrong in the prediction of $65, Manisha.
All right. You're saying this because of the impact on demand, because the investment numbers for this year clearly seem to be very, very positive.
Yeah, because the demand in investment is going up. Simultaneously, the demand in industry is going up. Till last year, the industrial demand in silver was between 48 to 52%. This year, it has increased from 52% to almost 60% now. So the more and more the prices are going up, the consumption in industry is going up. And the most important thing, what we need to understand when we are talking about silver as a metal, the consumption of silver in EVs, as well as the solar panels, if I look at the entire consumption of silver in industries, is significantly low. That is not even more than 15% in EVs and solar consolidated. So more than 40-45% is in other uses. So when the EV production is going to go up, as the Minister for Transport, Mr. Nitin Gadkari, has said, that the EV production in India is going up, and India is going to see a huge jump in EV production. So that it also will impact in a big way in demand of silver. So I feel totally when I see the numbers of demand and the supply side, it is going to be a big mismatch, because silver is not going to be there in supply, because it is a byproduct majorly. It is not production by itself. It is not mined itself. So that is the big reason. Manisha ji.
Mr. Gupta, what also is your sense of investment buying for India? As you said, industrial is becoming a big part of this. But when you break down those numbers for this current year, the investment demand has seen a very strong jump up as well for ETFs and in the physical markets also. Being where we are right now at a season where people do buy for investment and gifting because of the wedding season as well, are there a lot of people coming in buying? Also, what is the exchange number for old silver to new that you have seen?
Honestly, fabrication, old silver to the new silver is not huge. People are holding the old silver and they are buying the new silver.
Okay.
Definitely, during Diwali time, those people who have bought are a little skeptical because at the time of Diwali there was a premium of roughly around 10 to 12% in physical silver. Because of that, right now the investment demand is little low, but the consumption demand, being the wedding season as well as the gifting season is going great. But investment demand little bit is slow at this particular moment. The consumption demand is high, Manisha ji.
A final question then, and since you are with us, what is your sense also on the gold jewelry buying? Because what we hear until time is that North India is buying, South India continues to buy as well. It perhaps is the Central, East and West India where the jewelry demand clearly has declined sharply.
Definitely, yes. There is a small dip in gold buying, gold jewelry buying, I can say. There is a drop of, if I look at the numbers, there will be a drop of 15 to 20% in jewelry sales. But value-wise, we are doing fantastic. Volume-wise, little bit we are low. So, because the prices have gone up so high, the pocket sizes of the consumers have not gone that high. That
Right.
is affecting the volumes. But value-wise, we are not seeing a dip in the jewelry sales of gold. Manisha ji.
All right, Mr. Gupta, thank you so much for joining in. So clearly, as far as silver is concerned, the prices are expected to go higher. Industrial demand, investment demand, you name it, and people want to lap up silver. Not so much in case of gold, where we have seen the jewelry demand decline in sense of volumes as compared to last year. But with that, that's all the time that we have on this episode of Big C. Thank you for watching.